Hi everybody, this is Gary Dean with Sentiment Timing, and this is a free market recap for Thursday, January 10th, 2019. So, the bulls continue to press the bears, and I believe they're going to keep doing it until every bear is out of this market. Our predictive analytics model, time, we're still bullish. Sentiment, people still are not believing in this this market right now. We're seeing the S&P go up day after day, and we only saw one extreme bullish sentiment reading, and until that changes, we're going to see the bulls continue to press higher. Now, it doesn't mean that we can't have some pullbacks along the way. We saw the bears try today in the morning, and it was down a pretty decent amount, and then the bulls came back, and by the time that the bell closed, we saw the S&P up 11. The technicals are giving us the warning that we could get a pullback. But one thing I've been telling members is that it's not the market. It's not the type of technicals that you want to short. Even though it could be a good trade and there could be points, it reverses very quickly, especially when 2 out of the 3 predictive analytics say indicators that we follow are bullish. So technicals, it's not safe to be jumping long right here, just because we've had such a big move. But the thing is that on the intermediate term, we're probably just in this area here. We're not anywhere near the thrill or the euphoria, and that's primarily because of the shellacking that the bulls took on the way down. That nobody believes this, and this is what seems to be happening month in and month out, is that people go from extreme bullish readings to extreme bearish, and it takes them 200-300 S&P points before they finally realize that the market's turned, and by the time they jump into it, it's usually when we are here and the market's about to turn. So this was an extreme bearish low that we hit here, a panic low, and from that it takes a while for things to get back into where everybody believes the market's only going to go up. So this is the type of environment that, even though we have bearish divergences and the technicals are warning not to just jump long because we could get a pullback and it would make sense, it's not the market the type of short, and what you do is you simply just manage your open positions. So we took half of our profits off the table from the long here, and again, that's after already taking profits here from when we got long at the 23.58. So we're in 2 really good trades right now, but we're in resistance still, and there's some bearish divergences. So we took half off. If we get a pullback, we'll just wait for support to hold and buy. If it goes up, then we're just going to ride the half a position and be long. So if we do continue, if the bears decide that they're going to try to press, they need to get it through the 25.62 and then below the 25.45. If the bulls are going to try higher, which they've been doing on a daily basis, what they need to do is get through this little resistance right here, and that's right around the 2600. We're only 4 points away from that. If that happens, then we should see a quick move up to the right around that 26.20 area, and we have an open gap that's all the way up at the 26.46. And again, I would not be surprised to see that type of move take place. So right here, just to give you guys a little clue, what we've been telling members is that price and time right now, you can see that from this low to this high, this is just a duplicate box on it, that this is giving us a clue that the bulls are going to head someplace up into this 26.20. But again, we have some bearish divergences on the 60-minute chart. So again, if we get a pullback, then we're just going to simply look to buy the dip. And really, the main takeaway in this free video is that just right now believe in this rally, even though the recommendation isn't to just jump long. If I'm going to be wrong, it's going to be that we just continue higher. And if you try to short it, even though in a longer term view, we do believe that we are in a bear market, and that was called when we were, you know, all the way in up here and up here, that the market was going to be heading down. Even when you're in a bear market, you have to be able to trade both ways, because anybody that jumps short on this breakdown thinking we are crashing are they're getting slaughtered, and we don't believe that that's going to end until all the bears are out. So quick little note, this is the last call for this special that we have right now. This is the $2.99 for 4 months, or $99 for 45 days. This will be changing. I believe we have somebody that does this for us. It's either going to be tomorrow or tomorrow night. One of these, you know, they do it for us. But the new special that they are going to be putting up is going to be $3.99 for 6 months, or $149 for 60 days. So if you want to take advantage of this, that would be tonight's the night to do it. And again, we're our predictive analytics model has been correct since we've made that low. Time is bullish. Sentiment has not gotten into extreme bearish readings, and technicals are giving you a little bit of a warning not to jump long. But if we're going to be wrong, it's going to be to the upside. So until next week, have a great night, and I'll talk to you guys later.